Operation Epic Printing is underway today. Of course, the conflict in Iran could impact the market in a very big way. We'll break it down for you. I do want to thank our sponsor, and that is iTrust Capital. This is where you guys can get into long-term investing, because in these times, long-term is really the only way to play it. And remember, one of the other things you should always do is diversification. Diversification of anything you're into. It doesn't matter if you're into crypto, if you're into stocks, bonds, this doesn't matter. Diversification, and of course a crypto IRA is one of those that you can do. You can also get gold and silver on this too. So precious metals IRA. By just using our link down below, you get a $100 funding reward just to get started. Let's go over to a couple of the key things that started the market to hit decline this morning, and the brakes came on, and of course that comes in from Trump and Truth Social. And what he's talking about is that we have a very, very heavy stockpile of weapons to continue this conflict for as long as, and possibly forever, was in his statement here. Now, this is starting to startle the markets and, of course, gets everybody into a position right now. And, of course, Senator Warren jumps right in on this and says, hey, there we go. Donald Trump did it again. Ran on a platform of no more wars. But here's the reality. No president in modern era has ordered more military strikes against many different countries as Trump. So there you have it. She is taking the lead right here to really fight against this and put Trump on the hot seat in terms of the conflict in Iran. The market, of course, responded in the same way. Over $950 billion wiped out of the U.S. market. Right there you see it. And this is coming from everywhere. It's not just tech stocks. It's coming from everywhere. This, of course, starts the market into a position that I think really puts pressure on the Fed. It puts pressure on the economy, and most of all, it puts pressure on Americans, which will put pressure on the administration. If you look at Kobeisi, they did a full alignment here of the playbook in which he has done, and it's in relationship to an investor step-by guide. And it's kind of interesting, if you scan down through this, it goes through all of the frequencies that he has done before. One, of course, every conflict starts in the same way. He goes out with kind of these threats, tells you to watch out. Then he moves into step 2, which is strategic posturing and physical positioning. We've seen that. And then, of course, we see this across not only the administration and what they're doing strategically with some of the economic sanctions, but also where they're going on these physical situations as well. Number 3 is the Friday night strike. Again, just exactly what happened on Friday and Saturday morning. We wake up and, of course, we're in Iran and with a conflict there. If you look at just the list of dates, right there they are, U.S. and Israeli airstrikes on Iran. This was June 21st on Friday. Military airstrikes in the Korean drug boats, again, Friday. October 10th, Friday, tariff threat. Venezuela airspace closure, Friday. Military action, Nigeria. U.S. airstrikes, of course, here on February 28th, Friday. All of this lines right up into continuation. Number 4, of course, gets into the premium expansion or the risk premium expansion across asset classes. It usually starts in stocks, but crypto, remember, gets hit first because it's a 24/7 market. So they can react to what's going on a Saturday morning or early wee hours of a Saturday morning, where some of these markets cannot. And then, of course, what you see there is he teases a forever conflict. This was a situation that we just reported on. Now, what does this do? There is the impact that we've seen so far, and it's very possible this could get a little bit deeper. Here is the analysis. First dip gets bought because investors assume a deal is coming. So remember, we thought, oh, okay, we're going to get a deal. This is just, take out the bad guys, get a deal. Second dip is bought because investors assume an escalation is only temporary. That, of course, got changed today. And then the third dip is when positioning begins to change structurally, and that has not happened yet. So I think smart money has been able to consistently identify when the polarity in sentiment has gone too far, particularly with increased retail participation in the capital markets. That is the big factor here. More people are involved in capital markets. This will affect more than what it has in the past, because you and I and everyday investors are out there being exposed to a lot of this volatility that is taking place. Here's Mark Cudmore. He talks about whether or not stocks are going to continue to decline. Take a look.
I think that over the weekend, what we saw was a game-changing event. I'm always in favor of not being too knee-jerk. Monday's price action didn't surprise me too much, but as we've had time to process it, it is fair to acknowledge that almost nobody I spoke to expected the Iran situation to be like this week. They did not expect the scale of attacks. They did not expect the scale of retaliation from Iran on all its neighborhood. They did not expect the disruption we've seen to the Strait of Harmuz. So everything we've seen is game-changing. Now, some people may dismiss it as it's only temporary. Friday close was the highest close since July last year. We were already trading before the weekend 10% above the average of the last year, almost 10% above the average last year in Brent crude. We're now 20% above the average of the last year. And that's not good for what we're happening in the credit sector. So consumer sentiment is going to get hurt by wealth effect, by higher prices, by higher yields, and just generally they're seeing images of war on their front pages around the world. So I think equities will reprice significantly lower over the coming weeks.
All right, so as you can see, this is an issue that is starting to stem a little bit deeper, especially around consumer sentiment, which will get impacted most likely with a lot of these situations playing out. You look at what we're already seeing with some very strategic placement. Here's Peter Thiel selling 280 mil of Palantir stock, which is interesting because this has only happened once before in the last year and a half. So what does he know? Everybody's asking. Other things you got to look at, of course, this is interesting too, because you're now looking at what has been the very network that supports Trump the most, I would say, Fox News. 59% now are disapproving of Trump's strikes on Iran. 56% see a long-term military conflict with Iran as likely. And then Trump campaigned openly to get out of these endless wars, and here we are. So this is a big hit, I think, to the president. It's a big hit to the administration if, in fact, that they get drawn into a much more severe conflict with Iran, which will only give more fire to the Democrats to really play into a position overall. So as you see, it starts to really fracture the base. One of the things that I think you have to look at is the performance. There's a lot of pundits out there who have been very pro-Trump. One, of course, has been Nick Fuentes. Listen to what he had to say.
This has to be the breaking point. This is the breaking point for the GOP coalition. You buried the Epstein files. There is no border wall. You didn't deliver on mass deportations. You cut corporate tax rates for the rich by cutting Medicaid again. No infrastructure bill, no middle class tax cuts. You got to refund the tariffs. And now we're in a regime change war with Iran. That's the breaking point. I'm out. I'm done. I am off the Trump train. I am not voting in 26. If Rubio or Vance are on the ticket in any form in 28, I'm voting for a Democrat.
Okay, so this is where I think the rubber meets the road, is that you are going to see Republicans, moderates, that are going to start to pull away from this. Now, whether they go to the Democrat side, I don't know. But one thing is for sure, this will put pressure on the Republicans in a very big way. Do you see that base starting to fracture in D.C., and especially if they lose the midterms, which is likely now unless something heroic happens with this situation with Iran? I want to go to another clip because this clip gets into the duration of this war and how it could be the key not only to the economy, but maybe even to Trump's administration. Take a look.
The good news is that this global economy has absorbed shock after shock after shock in the last few years and has proven incredibly resilient. But we don't want to throw too many shocks at it. So keep an eye on the duration of the conflict, because that is going to both fuel inflation, disrupt supply chains, and undermine growth at a time when policy flexibility is limited, especially for the Federal Reserve. Last week was all about financial instability, private credit, and also employment concerns. And that's why we went sub 4. So there's so many crosswinds. I think if you want to make a simplifying assumption, is we will mostly trade in a range of 4 to 4.5 unless we get a big financial issue.
Yeah.
And that financial issue would be some combination of the AI bubble and the private credit.
All right, so they're boiling it down to AI and private credit. Somewhat agreement with that. Point, of course, here is that this is very bad timing if you look at it, because this will stem more into inflation. This is going to cause some real trouble for the Fed, especially with the fact that we're already continuing to see a little bit of job loss to continue out through 26. And if we get more AI pressure, this could get very, very dire in the coming months. So you look at that, and then the poly market right here, U.S. Versus the Iranian ceasefire. The question is when that might happen. Well, the odds have been climbing quickly into June 30. This may stretch out quite a bit. 72% right now think June 30 is going to be the date. You look further into this, will Iran close the Strait of Harmuz, which will affect a lot of countries out there in general. Right now, this is still looking very high for the year, though, but the question is really, can they, with all of the requirements that's needed out there within the space? Here is a professor that goes into kind of a litany of things that he was predicting and what has happened so far, and why he thinks this market and this current global economic position may be in for some turmoil. Take a look.
I think that Iran has many more advantages over the United States. They're waging war against the entire global economy. And so they are striking the GCC countries. And not only are they striking GCC countries, American bases, but they're going after the critical energy infrastructure of these bases. They blocked off the Strait of Harmuz. The Gulf states are really the linchpin of the American economy. So what they do is they sell petrodollars, and then they recycle the petrodollars back into the American economy through the investments in the stock market. And right now, we know that the entire American economy is propped up by AI investments in data centers. And a lot of that comes from the Gulf states. Gulf states are no longer able to sell oil, and they're no longer able to finance AI, this AI bubble in the United States. Then this AI bubble will burst, and with it will burst as well the entire American economy, which is really a financial Ponzi scheme.
Right.
So that's a dire situation that the Americans are facing right now.
Okay, so first of all, this professor out of China, yes, there is a dog in the hunt for that individual country, because this, of course, goes into more global economic issues, I think, in a much bigger way. Now, if he is laying down a format here, essentially what he is given is a roadmap as to what Iran could do next. And if that is the case, the water treatment plants, things of that nature, I don't know. I'm still on the fence as to what kind of rolling impact this will have on the rest of the world. It's only been a handful of days. A lot is yet to be uncovered around this. But I think the key here is if we start to see economic conditions changing here in the United States because of this, and it's that sensitive as he alludes, then you're going to have an immediate pushback. And I think at that point, Trump will get forced into a corner. So there are a lot of things, moving parts. Economically, the U.S. is not in a good spot economically because of the inflation scenario and also the job situation. The AI bubble may have been on decline already because of the lack of energy, which is really the core of what we are dealing with right now with data centers. There's just no power there. So I think the key there is if you run out of that, yes, you're going to run out of fuel that would fuel the idea of AI-enabled stocks and investments. So that is a bigger picture that has been kind of identified for quite a while. This, of course, muddies the water. So there is a lot to watch here, especially if all of this boils down to one thing, and that could mean a lot of printing coming in from the Fed to try to alter this. Now, I want to go to one other note here, because this is a good example. This is what would happen in the Strait of Harmuz if it were closed. Of course, China, again, gets affected the most. 38% of the supply that runs through there is going in crude oil traffic right now by destination. India also affected pretty significantly, as well as South Korea and most of Asia in reality. So this is a big deal for the Asian countries if this in fact does become a bottleneck for supply. Continue to look at that. You look at this right here. China reported now pressing Iran to keep the Strait of Harmuz open. 87% of Iran's exported oil went to China last year. That is something that the U.S. knows. I think the key here, again, Venezuela also in this picture. Scenarios are painting out very uniquely. Now, I don't know where Trump's administration has in terms of strategy, or if there is a strategy that is trying to corner the Chinese around the petro side of things. But this does start to get very, very interesting as things start to push into the markets. The other thing that hits the markets, of course, this is Iran saying this, that the U.S. Is $1 trillion in debt. Well, that's not new. And thirsty for Middle Eastern oil. That is a fact that I think maybe is one of the reasons that this is occurring. Again, this goes back to Trump trying to control the petrodollar and at the same time trying to shift into a new financial system that most likely will be driven off of stablecoins. Again, this goes back into the crypto policy, what we've seen with the Genius Act, and whether or not we can export dollars globally, at least into securities. So that also plays into this. I want to go to this other last clip, which is talking about inflation and where it really started, because a lot of this has been happening for some time. Take a look.
But I do think, listen, wars in general never really are disinflationary or deflationary. I think the bond market is picking up on that at the moment, whether that be because of, the obvious oil and natural gas disruptions, or whether it be more due to supply chain issues. It's hard to make a case how what we saw over the weekend is going to lead to deflation or disinflationary forces. And
especially going into it, there were inflationary concerns.
Well, that's the thing, is that, I think even without what was going on with Iran, you've been seeing inflation start to tick up pretty meaningfully. Remember, core PCE is what the Fed cares about, and core PCE bottomed in April of last year. You look at, ISM input prices today, you look at the PPI data, it's all suggestive of higher inflation, not lower inflation. And so this just adds another wrinkle to that, which I think the bond market is getting right? You started off with the flight to quality and lower yields, and that quickly reversed course, and now you're seeing higher yields, and I think that's the right reaction.
To their point, the economy is looking at PCE, and he is right. There it is. April of 2025 was the bottom. It has been increasing, so it has been a situation that has been consistently climbing. The printing side of this is going to get very, very important, and here's why. The Fed just injected another $3 billion. I know that's not a lot, but the fact is they're continuing to do this on the overnight repo side. This, of course, starts to put more liquidity into the system. Then, of course, you have to consider this right here. This is what Arthur Hayes was hitting on, of why he thought that the printing would begin. One, thesis simple, and this is in reference to a war that could be extending out here, and that is war spending would increase, artificial intelligence-driven economic disruption hits in, and then you have these hidden liquidity injections, which right now we're starting to see. They're building a lot of system pressure right now that the Fed really can't ignore. And I think this is the factor that you also have to throw into that pile of situation there, and that is the labor side continuing to slow. So the market is going to react very, very violently, I think, especially if we start to see this continue to pull. Remember, there's been an estimated, or an anticipated, I should say, pullback of the S&P 500 for about the last year. Is that many people were anticipating this. This will wreck a lot of major investments, especially if you're long on some of these right now, unless a major turnaround occurs. So be on the lookout for a lot of this. Here's a tweet from Ben Cowan, kind of hits on this, and you have to think about this. This is where it's a dog chasing his tail. But many companies just passed the increase in prices onto you and me due to tariffs, right? Okay, we all acknowledge that. But now, U.S. consumers paid these tariffs via these price increases, and companies now are getting the refunds of which they already collected from us. So I agree, Ben, what a mess. Maybe the tariff refunds should simply just go back to the American people. We paid them in the first place, so why not? That would be the answer here. I think we only have one way out of this, and that's through. You look at this right here. This was Matt Hogan kind of responding to the issue with Ray Dalio, saying that Bitcoin is a bad thing and won't necessarily see the light of day, continuing to put pressure on this, saying central banks won't buy it, quantum risk are there. Matt comes in and says, yeah, I hear some criticism here, but I also hear opportunity. These are the reasons Bitcoin is 4% of gold, and if we do start to see more pressure on the American dollar, more pressure on Western control, then you're going to continue to see metals and most likely a risk asset, something like Bitcoin and a few others, start to make a move here. So be on the lookout for this, guys. This is where a lot of wealth is made, because in these times it gets very volatile. That's why I think diversification is very critical here. Keep your head up. We will continue to report on this as more news comes in. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.